Okay. Well, as you speak, Nishchal, our colleague Anu is picking up from Indigo that they have scrapped their leave, leave without pay, which means they're confident of paying their employees, and of course they're hoping that 100% occupancy of flights will be allowed. That's a very positive news. It shows that they are front foot forward. They are confident of paying their employees and will not ask them to go on forced leave. So that's another positive that is coming from Interglobe Aviation. Okay, but I think the big stocks that we have to discuss are banks, and we have undoubtedly one of the best banking analysts, Suresh Ganapathy of Macquarie Capital, joining us. They are simultaneously, of course, having their annual investor conference as well, where he has interviewed a former Deputy Governor, Viradacharya. But first things first, Suresh, thank you very much for joining us, HDFC Bank. I read your report, and you say that credit cards, although they form a big part of HDFC Bank's income, it is only incremental credit card guys who the bank cannot add for about 3 to 6 months. How would you look at the stock? Is there any cut on their earnings? Will there be cut on valuations as such a spotless bank now gets a bit of a dog, if you please?
Okay, Lada, so first of all, to begin with, the financial impact is very, very marginal. As we have already pointed out, this is only on the incremental portfolio. And on the contrary, it could be even positive because you're not acquiring credit card customers with the cost of acquisition is high. So you book the cost of acquisition upfront, and then the income will obviously come over a period of time. Anyways, the point here is not necessarily the financial impact coming out of the restrictions imposed by Reserve Bank of India. As you rightly pointed out, whether it can have some kind of a dent in valuations. Look, at the end of the day, all these things accumulate, right? So eventually, if you're not offering a better service or a better product to your customer, it will show in growth numbers, it will show in earnings numbers. So at this point in time, I really don't think there is that big a serious issue for us to really relook at the sustainability of growth or earnings. It's a challenge, obviously, because when Sapuri was there, he built the market share from 0% to 10%, and Sashi is having a daunting task of increasing it from 10 to 20%. So at that time, obviously, scaling up technology is going to be even more difficult, and especially when HDFC Bank is almost 40% of the payments market. So it's going to be a challenge, no doubt about it. But then I think the kind of products, the kind of reach and the presence that HDFC Bank has got, I think this is just a temporary setback in our view.
Suresh, good morning, which is why, sometimes it amazes me to see these simplistic trades play out in the market. Yesterday, everybody was buying up SBI Card as if that all new incremental customers will now rush to State Bank of India since the HDFC Bank won't get them. So your view, however, on SBI Card itself, because even at the time of the issue, people were talking about valuations. Yes, the country is moving to more and more plastic. But how do you view SBI Card as a franchise?
Of course, there is a big potential and opportunity when it comes to the credit card potential in the market or in the overall country per se. And you can very well clearly see as incomes rise, as more and more people go for online spending, there is a market. But we also have to look at it in this way that when you're comparing, say, for example, SBI cards or the HDFC Bank, I think the kind of customers that an HDFC Bank caters to is definitely a couple of notches above, not only SBI card, many other bank customers. Some of the cards that HDFC Bank offers, I don't think anybody else in the market can give you that kind of a lucrative deal. So in that sense, it's quite naive to think about it in this way that, HDFC Bank credit cards as new acquisition is not going to happen, and therefore everything will shift towards SBI cards. It's all a very temporary thing, and therefore making a trade out of this development is something which I think is unwarranted.
So what kind of, for HDFC Bank itself, what kind of market share are we looking at in terms of the digital services, the credit card business, and how much do you think they can scale that up to, say, over the next 6 to 12 months?
Look, Sonia, they already have a pretty high market share. On an outstanding basis, they have about 26% market share in terms of number of cards, right? And in terms of incremental market share, if you were to look at calendar year date, that number is 31%. I guess that 31% may again revert back perhaps to 26, 27%, mainly because of the fact that about 3 to 6 months maybe you are not really in the process of acquiring new credit card customers. Longer term, I think in terms of numbers, I think think HDFC Bank will still be 1/4 of the market when it comes to credit cards. In number terms and in value terms, definitely they will be 1/3 of the market, considering the card spends for them are going to be always higher compared to that of other players in the market.
Okay. Yeah, so basically you're not changing your price targets. Now let's get to the broader banking universe. Suresh, the bank results gave all of us the impression that slippages are not going to be too many, even when the Supreme Court dispensation and the RBI dispensation is over. But you every now and then get contrary evidence. I guess you spoke to Viralacharya, so you may have some more idea of how the post-COVID world will shape up for banks. Are you positive still on SBI, ICICI, Axis?
Yes, so if you were to really look at the good quality banks, I think there are no two ways about it that in a post-COVID world, these quality banks will continue to gain market share. They have a better capital position, better management, maybe I don't know whether it's the right time to say they have a better technology today, but nevertheless, they are pretty good in terms of various factors which are enablers in terms of gaining market share over the course of next 5 to 10 years. The critical call in the near term, Lata, is about sustainability of the recovery. We have already seen in the near term that for the month of November, some of the broader parameters, like if you were to look at the Google Mobility Index or power consumption and stuff, they all have trended down. But remember, we are of course comparing it post the festive season where some kind of a slack was expected. My worry is also about the sustainability of collection efficiency in the near term, because if you were to look at the NACH debit bounce rates, they are still pretty high in terms of value. It is still above 30%. So that is something which we are very worried about, because when banks are saying collection efficiencies of 95%, we really need to see whether some of that is actually sustainable into the next couple of months, which obviously has an implication with respect to asset quality. Nevertheless, all the large ones have enough capital and enough pre-provision operating profitability to provide for any further COVID-related stress if it were to materialize over the course of next couple of quarters.
Okay, I also want your thoughts on how to approach NBFCs here on after the rally that we've seen, because since the last policy and the dovishness from the RBI, this whole rate sensitive space has grown quite a bit, particularly for NBFCs. Do you see more potential here purely because, now everything has opened up, the demand from MSMEs would go up and NBFCs have the last mile connectivity. So do you see more potential here?
The only issue in the near term could be, we will have to see how exactly the RBI policy is. But my guess is some of this abnormality that you're seeing in the rate markets, whereby you're seeing commercial paper rates even being below reverse repo rate, is something which we have never seen. So I think there can be a withdrawal of the accommodative policy of Reserve Bank of India, which at the margin could be negative for Reserve Bank of for the NBFC space. So in case, let's assume RBI comes and gives a slightly hawkish tone today, I think we can see some kind of a profit taking happening in NBFCs in the near term.
Okay. Let me ask you about SBI itself and of course its smaller peers. Yesterday we had a pretty interesting catch-up trade play out on a lot of PSU banks. There was a note from one of your fellow brokerages as well, sounding optimistic on State Bank. So since the market is looking for anything that's not moved now, will PSU banks make the cut at all, or is this just momentum, pure momentum that's playing out and we shouldn't read too much more into it?
See, barring SBI, it's very difficult to take a call on any of the others, right? We know the enormous amount of challenges which just exist across these other PSU banks. To be honest, they at best remain trades. They can never be taken as investment ideas.
It's that, do you think that there is some fundamental reason for that trade itself, for the catch-up to at least last a couple of weeks, or is it just day to day and we shouldn't read anything beyond it?
Again, day to day, really difficult to read beyond that. I mean, look at it for a sustainability of a trade for about a month, 2 months, 6 months. You need to see actually, the fundamentals improving. While there can be obviously a lower credit cost compared to what was anticipated earlier, there are structural issues with respect to the fact that the capital position is weak, barring SBI, as I said. They all are losing market share in a big way, not only on the loan side, but now they have started losing market share on the liability side also. So, these challenges just remain. Okay. So, unless these structural issues are solved, difficult to advocate a long-term positive view.
Okay, one final question, Suresh. Not much time to discuss NBFCs. Don't talk about Bajaj Twins and insurance companies and HDFC. Barring the big ones, do you like any of the NBFCs, the transport funders, housing finance companies?
Yeah, so some of the players like say Shriram Transport Finance, which are very leveraged to the economic cycle, could be good plays. Valuations are also attractive even at this point in time. Obviously, one has to get a clear hang over the commercial vehicle cycle, whether a financial year 21 could be better, depending upon what are the financial year 22, sorry, depending upon what exactly are the economic prospects. But yeah, I mean, these are relatively decent NBFCs available at cheaper valuations where we can be a bit more positive.
Okay. Suresh, thank you very much for sparing time. I think your twins are calling you. We can hear them. Thank you very much indeed for joining us.
You.
Pleasure.
Thank you so much. Yeah.
Okay. We still have more questions for questions on pharma for Mr. Maheshwari. And let's get Ekta first to tell us about diagnostics companies and how they might be hit by the continuous cut in the RT-PCR tests. Tell us, Ekta.
Well, thanks, Lata, for that. Well, like you mentioned, there are reports indicating that private labs have actually been up in arms because of the decision to cut prices of the RT-PCR tests. So, for example, Delhi, Odisha, West Bengal, Rajasthan, all of them have cut prices significantly. And the Supreme Court is also hearing a plea to cap it at around 400 rupees. Now, in terms of what the impact could be, remember that volumes of RT-PCR tests have risen Q on Q by around 49% in Q3 FY21 currently. So maybe the volumes would rise, but most labs are expecting non-COVID tests to pick up anyway, and COVID testing to probably scale back a little bit. So they have already dealt with two or three price cuts on an average before. So they'll probably take it in their stride and expect volumes to increase while prices could go down.
Okay, got that. All right, so prices going down on those tests. Ekta, thanks for that. We do need to take a very quick break. We'll come back on the other side. Need to get the technical setup going with our experts and get you trading ideas for the day.